So leasing entities. So please write. Say a lease is a contract. A lease is a contract between. A lease is a contract between. A lease is a contract between. A lease is a contract between a lessor. A lessor. A lease is a contract between a lessor and a lessee. A lease is a contract between a lessor and a lessee for the hire. For the hire of a specified asset, or for the hire of a specific, for the hire of a specific asset, for the hire of a specific asset, the term lessee, the term lessee means a person who leases. The term lessee means a person who leases from the owner. The term lessee means a person who leases from the owner, a person who leases from the owner of assets, a person who leases from the owner of assets, and in return for the use, in return for the use of such assets, makes periodic payments. Next point, the term lessor means a person. The term lessor means a person who leases an asset. The term lessor means a person who leases an asset to the lessee. The term lessor means a person who leases an asset to the lessee. The lessor retains ownership. The lessor retains ownership of the asset. The lessor retains ownership of the asset. The lessor retains ownership of the asset, but conveys the right. But conveys the right of the use of the asset, but conveys the right of the use of the asset, to the lessee for an agreed period of time, in return for the payment of specified rentals, Then you see there are two types of leases. Which are A, finance lease, and B, operating lease. Then we start with the first one as subheading, finance lease. finance lease. Then you say, this is a leasing contract. This is a leasing contract. This is a leasing contract under which, this is a leasing contract under which the lessor agrees. This is a leasing contract under which the lessor agrees to lease assets to the lessee. This is a leasing contract under which the lessor agrees to lease assets to the lessee for a specified period of time. For a specified period of time. For a specified period of time where the risks and rewards, associated with ownership, where the risks and rewards associated with ownership, where the risks and rewards associated with ownership, where the risks and rewards associated with ownership of the assets, with ownership of the assets, are substantially transferred from the lessor, to the lessee, but the title to the asset, always remains. But the title to the asset always remains with the lessor. But the title to the asset always remains with the lessor. The transfer of risks means the risk of ownership. The transfer of risks means the risks of ownership, which include the possibility of losses, from idle capacity, or technological obsolescence, or variations in the returns, due to economic conditions, The rewards are represented by the expectation. Of a profitable operation. The rewards are represented by the expectation of a profitable operation over the asset's economic life. And any gains from the appreciation and any gains from the appreciation in value, and any gains from the appreciation in value, and any gains from the appreciation in value, and any gains from the appreciation in value or realization. And also, and any gains from the appreciation in value or realization of the assets, or realization of the asset. Okay. Then the next type of lease, operating lease. So B, operating lease. Operating lease. Operating lease. You see, this is a leasing contract. This is a leasing contract under which, this is a leasing contract under which, this is a leasing contract under which the lessor agrees. This is a leasing contract under which the lessor agrees. This is a leasing contract under which the lessor agrees to lease the assets. The lessor agrees to lease the assets, to the lessee, under which the lessor agrees to lease the assets to the lessee for a specified period, to the lessee for specified periodic payments, to lease the assets to the lessee for specified periodic payments, where the title to the asset, and the risks and rewards, where the title to the asset and the risks and rewards, associated with ownership, substantially remain with the lessor. Substantially remain with the lessor. Substantially remain with the lessor. Next, embedding the income tax leasing rules. The income tax leasing rules. The income tax leasing rules. Number one is saying the term asset, you can put asset in quotes. The term asset in quotes, includes equipment. The term asset in quotes includes equipment, but excludes land and buildings. The term asset in quotes includes equipment, but excludes land and buildings. Number two, cross-border lease. So it's cross-border. So cross-border lease. So cross-border in quotes, Or, no, let's put the whole phrase, cross-border lease, Say, cross-border lease means a leasing contract. Cross-border lease means a leasing contract entered into. Cross-border lease means a leasing contract entered into between a person resident in Kenya, Cross-border lease means a leasing contract entered into between a person resident in Kenya and another person resident in a different country, and another person resident in a different country, and another person resident in a different country. Number 3, hire purchase. Hire purchase means a contract under which hire purchase means a contract under which hire purchase means a contract under which the lessor agrees. Hire purchase means a contract under which the lessor agrees to lease assets to the lessee. Hire purchase means a contract under which the lessor agrees to lease assets to the lessee for a specified period of time. For a specified period of time. For a specified period of time, with the intention of transferring ownership. For a specified period of time, with the intention of transferring ownership. The intention of transferring ownership at the expiry of the lease. With the intention of transferring ownership at the expiry of the lease. At the expiry of the lease, provided that any contract whose term is less, provided that any contract whose term is less than 6 months, provided that any contract whose term is less than 6 months, shall not be deemed to be a lease. Shall not be deemed to be a lease. Number 4, the income accruing to the lessor, the income accruing to the lessor from payments received. The income accruing to the lessor from payments received. The income accruing to the lessor from payments received, irrespective of a finance. The income accruing to a lessor from payments received, irrespective of a finance or operating lease. Irrespective of a finance or operating lease, shall be chargeable to tax. Shall be chargeable to tax. Shall be chargeable to tax. Number 5, a lessor shall be entitled to claim. A lessor shall be entitled to claim. A lessor shall be entitled to claim as a deduction. A lessor shall be entitled to claim as a deduction. A, investment allowances. Investment allowances on the leased assets. Investment allowances on the leased assets. And B, any other expenditure incurred wholly and exclusively. Any other expenditure incurred wholly and exclusively. Any other expenditure incurred wholly and exclusively. Any other expenditure incurred wholly and exclusively in the production of income. Any other expenditure incurred wholly and exclusively in the production of income. Next point, in the case of the lessee, he shall be entitled, to take as a deduction In the case of the lessee, he shall be entitled to take as a deduction. He shall be entitled to take as a deduction the full amounts of the payments, the full amount of the payments made, the full amount of the payments, the full amount of the payments made to the lessor. The full amount of payments made to the lessor. Then the last point, you see, where upon termination of a lease, 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 in respect of which the lessee, where upon termination of a lease, in respect of which the lessee was entitled to any deduction, in respect of which the lessee was entitled to any deduction, and with the express or implied, and with the express or implied consent, and with the express or implied consent of the lessor, and with the express or implied consent of the lessor, and with the express or implied consent of the lessor, the lessee is allowed to, use, enjoy, or deal with, the lessee is allowed to use, enjoy, or deal with the asset as he may deem fit, or deal with the asset as he may deem fit, or deal with the asset as he may deem fit. When you put a colon is like that. When you say A, without payment of any consideration, 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 or B, subject to the payment of consideration, subject to the payment of consideration, subject to the payment of consideration, which is nominal, subject to the payment of consideration, which is nominal, in relation, subject to the payment of consideration, which is nominal, in relation to the fair market value, subject to the payment of consideration, which is nominal, in relation to the fair market value of the asset, or C, if the asset is transferred to the lessee, 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 and it passes for an amount, and it passes for an amount, and it passes for an amount that is less than the market value, if the asset is transferred to the lessee and it passes for an amount that is less, it passes for an amount that is less than the market value, comma, the new paragraph, you say, the lessee shall be deemed, the lessee shall be deemed to have acquired the assets. The lessee shall be deemed to have acquired the assets. The lessee shall be deemed to have acquired the assets, and the commissioner shall claw back, and the commissioner shall claw back. the lessee shall be deemed to have acquired the asset, and the commissioner shall claw back, in brackets, recover, claw back, or in brackets, recover, the deductions previously enjoyed. The deductions previously enjoyed, previously enjoyed by both the lessee and the lessor. The deductions previously enjoyed by both the lessee and the lessor. The deductions previously enjoyed by both the lessee and the lessor. Then continue and say, however, the lessee shall be allowed to claim. However, the lessee shall be allowed to claim. However, the lessee shall be allowed to claim. However, the lessee shall be allowed to claim investment allowances, investment allowances from the date of the commencement of the lease. Investment allowances from the date of the commencement of the lease. Investment allowances from the date of the commencement of the lease. So that's how the leasing business operates. There are two parties. There's the lessor and the lessee. So most of the accounts we'll be looking at are the accounts of the lessor. So he'll be leasing out assets, and he'll be paid, isn't it, for the leasing period. So idea is to prepare statements for the leasing income. So if you can check, I think the other sitting was April 2022. There's a leasing question. I'm not sure if it's question 4. Yeah, it's April 2022. You found it? It must be question. It's April 2022. This must be question 5, I think. Yes. Question 5 is leasing. April 2022, question 5. I will answer the whole question. So start by looking at A part. It says, describe 4 constraints faced by the revenue authority in your country in the assessment and collection of taxes for micro, small, and medium enterprises. So it could be challenging. The bigger part of this country is this small, micro, small, and medium enterprises. So there are many challenges you can point out. First of all, they're informal, and because they're informal, most of them may not maintain good records, and that could be very difficult for, say, the revenue authority to try and piece together their incomes. So just say for the first part, A, constraints faced by the revenue authority. Constraints faced by the revenue authority. So this is April 2022. The question is April 2022. Question 5A. Constraints faced by the Revenue Authority in assessing and collecting taxes. In assessing and collecting taxes. In assessing and collecting taxes for micro, small. In assessing and collecting taxes for micro, small, and medium enterprises. We call them S and SMEs. MSMEs. The first constraint, lack of taxpayers' data. Lack of taxpayers' data. Lack of taxpayers' data. Stroke information. Lack of taxpayers' data, stroke information. When you say lack of taxpayer data or information, when you say there is no detailed information, hello? Yes. Salama. For class 8, so maybe we can talk after I'm done. Actually, I'm done in this class now. Yeah, we go up over 8. Okay, so lack of taxpayer data or information, you say there is no detailed information, there's no detailed information or database for MSMEs. There is no detailed information or database for MSMEs, thus making it difficult to bring them into the tax net. Thus making it difficult to bring them into the tax net. Thus making it difficult to bring them into the tax net. The next constraint, inefficient utilization of tax revenue. Inefficient utilization of tax revenue. Inefficient utilization of tax revenue. So you say there is general apathy to voluntary compliance. There is general apathy to voluntary compliance with the provisions. There is general apathy to voluntary compliance with the provisions of the tax laws. There is general apathy to voluntary compliance with the provisions of the tax laws because of the level of delay, because of the level of delay in providing basic infrastructure because of the level of delay in providing basic infrastructure across the country because of the level of delay in providing basic infrastructure across the country. Which has always questioned, which has always questioned, which has always questioned the need for the continued payment, which has always questioned the need for the continued payment of taxes, which has always questioned the need for the continued payment of taxes, which has always questioned the need for the continued payment of taxes. Next, tax evasion. Tax evasion and avoidance. Tax evasion and avoidance. Then we say it is easier for MSMEs, it is easier for MSMEs to evade tax. It is easier for MSMEs to evade tax since most of them may not have fixed business premises. Most of them may not have fixed business premises, and are likely to avoid payment of taxes, Next one, lack of experienced and suitable or suitably qualified. Lack of experience and suitably qualified personnel. Lack of experienced and suitably qualified personnel. Lack of experienced and suitably qualified personnel. Then you say most of the tax officers may lack the requisite experience and knowledge. Most of the tax officers may lack the requisite experience and knowledge, of the tax laws required, to approximately assess the self-employed, the next constraint, inadequate penalties, or lack of enforcement. Inadequate penalties or lack of enforcement. Inadequate penalties or lack of enforcement. Inadequate penalties or lack of enforcement. So we say the penalties for non-compliance, may be too lenient. The payment penalties for non-compliance may be too lenient, to compel the self-employed, to pay tax, And there's a general lack of enforcement. And there's a general lack of enforcement. And there's a general lack of enforcement of the existing penalties. And there's a general lack of enforcement of the existing penalties. And there's a general lack of enforcement of the existing penalties. Next one, inadequate records. Inadequate records. Inadequate records. Inadequate records, you say, most MSMEs do not maintain records. Most MSMEs do not maintain records. Most MSMEs do not maintain records of their income and expenditure. Most MSMEs do not maintain records of their income and expenditure. With some even mixing their business activities, with personal affairs, with some even mixing business activities with personal affairs, making it difficult to determine the taxable income. Making it difficult to determine the taxable income. Making it difficult to determine the taxable income. Next, constrain the level of corruption. Level of corruption, we say some of the tax officials may collude. Some of the tax officials may collude. Some of the tax officials may collude with taxpayers to defraud. With taxpayers to defraud the government of taxes. To defraud the government of taxes. And finally, lack of public enlightenment. Lack of public enlightenment. Lack of the public enlightenment. Lack of the public enlightenment, then you say most of the taxpayers may not know. Most of the taxpayers may not know. Most of the taxpayers may not know what to tax. Sorry, what tax to pay. Most of the taxpayers may not know what tax to pay and when. What tax to pay and when. Thus, the public should be educated on their responsibility. Thus, the public should be educated on their responsibility. Thus, the public should be educated on their responsibility. Thus, the public should be educated on their responsibility with respect to tax. With respect to tax. With respect to tax payment. With respect to tax payment. So that was A. Then B, discuss how the revenue authority of your country might deal with the taxpayers' apathy in filing of returns. So how can the revenue authority deal with the taxpayers' apathy? So just say B, dealing with taxpayers' apathy. Dealing with taxpayers' apathy. Dealing with taxpayers' apathy. The first bullet, sensitization of all taxpayers. Sensitization of all taxpayers. Sensitization of all taxpayers through the media. Through the media. Another way, working with professional bodies to promote tax filing, working with professional bodies to promote tax filing. Next, giving of incentives to the taxpayers, Next, public recognition of the taxpayers, who file their returns, on time, public recognition of the taxpayers who file their tax returns on time. And lastly, simplified automation process for filing returns. When we look at Part C, Haraka Limited started operations in January 2021 in the business of leasing vehicles and computers. Now, the following information relates to the company's transactions for the year ended 31st December 2021. Number one, the company leased the following assets in the course of the year: 6 delivery vans to Zito Limited for 6 months at 30,000 each per month. 4 pickup vehicles to Chama Limited in Uganda for 400,000 per month for 6 months. 20 computers to Upper University at a monthly lease of 4,000 each for the whole year. A BMW vehicle to be limited for use by one of its directors at a monthly lease charge of 60,000. 2 Land Cruiser Prado vehicles to Z contractors at an annual lease charge of 40,000 in total. The lease contract for 1 vehicle was cancelled on 30th June after Z contractors failed to pay lease charges for 4 months in the year. The delivery vans to Zito Limited were returned upon lease expiry, and Haraka Limited leased them to Sokoni Supermarket for 4 months at 24,000 each per month. To Haraka Limited incurred the following expenses in the course of the year. Now, general administration expenses is 1,600,000. Legal expenses is 480,000. Repairs and servicing is 320,000. Legal expenses included 120,000 for defense against claims of breach of the lease contract. 3, investment allowances have been agreed with the Revenue Authority at 620,000 for the year. For Haraka Limited, had other incomes as follows: rental income from residential properties 2,400,000 per annum, dividend from SIFA Mutual Fund, interest from money market fund, and royalties of 360,000 net of advertising expenses, and renewal of patent of 40,000 and research costs. Required, compute the taxable income or loss for Haraka Limited for the year ended, and then tax payable by Haraka Limited. So we'll prepare a statement of taxable income. So we'll first get what would be the income of the company, then we'll look for allowable expenses, and we'll work with one source at a time. So for now, we'll specifically deal with income from leasing. Then we look for any other sources that could be there. So note one has some income there. So the company leased the following assets in the course of the year: 6 delivery vans to Zito Limited. So we lease to Zito. Now to Zito Limited, they lease 6 delivery van at 30,000 each per month. We have 6 delivery vans. Now these delivery vans are being leased at 30,000 each a month. So this should be 30,000 each per month for 6 delivery vans for 12 months. So that should be able to give us the income. 30,000 for each delivery van for 6 delivery vans for a whole year. This gives us income of 2160. Then 4 pickup vehicles to Chama Limited. So there's Chama. So this is 4 pickup. So 4 pickup vehicles to Chama Limited in Uganda for 400 per month for 6 months. This is simply 400 per month for 6 months. Should be 2,000,000. The first one I think is wrong. It's 6 months. So in the 6 months, so CO12, this should be 6. So let's correct this. This is 6 months, not 12. So they only lease for 6 months. So 1080. Then 20 computers to Upper University at a monthly lease of 4,000 each for the whole year. So we have Upper University. Upper University, we lease out 20 computers. To Upper University, at a monthly lease of 4,000 each. 4,000 each. So 20 computers at 4,000 each for the whole year, so times 12. So this is 960. Then a BMW vehicle to be limited for use by one of its directors at a monthly lease charge of 60. So is be limited. BMW vehicle for one of the directors. Monthly lease charge is 60. So monthly times 12 months should be 720. Monthly 60,000. Yes. Next one, 2 Land Cruiser Prado vehicles to Z contractors. With Z contractors. So Z contractors. So Z contractors, the 2 Land Cruiser. Or let me say Prado. 2 Prado. At an annual lease charge of 1440 in total. So 1440 is in total. The lease contract for one vehicle was cancelled in June after Z contractors failed to pay lease charges for only 4 months. For 4 months. So this, there are 2. One of them will have to apportion. So half is 720. So apportionment here, moja itakuwa 720 in full. Hiyo ingine inachukua 4 months. Wamelipa 4 months over 12 times 720. So they've only paid installments for 4 months. The timing when they pay is not really of essence.
They pay the lease charge for 4 months.
Yeah, so 4 months out of 12.
They pay. At least they pay for 6 months.
Or they failed. Or it is failed. Let's see. Was cancelled. Oh. They failed to pay for 4 months, so they paid for 8 months. This one is 1.2. The delivery vans to Zito were returned. So Zito was the first one. They had 6 delivery vans to Zito Limited were returned upon lease expiry, and Haraka Limited leased them to Sokoni Supermarket for 4 months. So yes.
Should it be 8?
Yeah, 8, yes. The date of payment should not confuse you. They might have paid on 30th June, but they paid for 8 months because they failed to pay for 4 out of 12. So it means they paid 8. So wanasema ni miezi 4 hawakulipa. Kwa hivyo walilipa 8. That can confuse you for no reason. The date of cancellation doesn't mean payment. What they did not pay is 4 months. It's not the date of cancellation. The delivery vans to Zito were returned upon lease expiry, and Haraka Limited leased them to Sokoni for 4 months at 24,000 each per month. So Sokoni Supermarket, they got hold of 6 vans which were returned. Now the 6 vans are 24 each per month for 4 months. So 6 vans are 24 each for 4 months. So 6 vans at 24 each per month for 4 months should give us what was obtained. So 576. Okay. Then Haraka incurred the following expenses. We leave expenses for now. General, legal, repairs, legal expenses. Investment allowances were agreed. So Haraka incurred the following expenses: general, legal expenses, repairs. Legal expenses incurred 120 for defense against claims of breach. Investment allowances have been agreed. Note 4, rental income, dividend interest, royalties, renewal of patents. Oh, so it's not in this question, but there's an income I thought I'd seen somewhere else. I think this is all as far as income is concerned. The other incomes are from different activities. Royalties of 360, net of advertising, renewal of patents, interest for money market, dividend, rental income. So this is from leasing. Then we lessen allowable expenses. That is purely from leasing. We lessen allowable expenses. Note 2, Haraka Limited incurred the following expenses in the course of the year. They are general admin expenses, which are allowable. So general admin expenses. So general admin expenses was 1,600,000. General admin expenses is 1,600,000. Legal expenses, you're told legal expenses included 120 for defense against claims of breach of the lease contract. So claims of breach of the lease contract suggest that the matter is not yet determined. It's not yet determined, so they are not yet guilty of breach until the matter is fully determined. So we are not going to adjust. So we are not going to disallow the 120 in using legal expenses until the matter is determined. We'll just claim the whole of 420, unless now they're guilty of breach. They are not as yet. Then you have repairs and servicing. Repairs and servicing. Now repairs and servicing is 320. Note 3, investment allowances have been agreed. So you bring in investment allowances agreed. Investment allowances have been agreed at 620. Then there are these other incomes, rental from property, dividend. Okay, so we first add this, get income from leasing, then we can look for these others. So profit from leasing business. Then we can add the other sources. So we are told there is rental income from residential property of 2,400,000 per annum. So property has its own set of laws. So we say up to 10 million. Normally the tax is 10%. When you file, it's called monthly MRI, monthly rental income. When you file monthly, then you get 10%, which is 240. That would be the tax on that. So let's not include that as part of the taxable income here. Then there's dividends from CFA, mutual fund. So for dividends, withholding tax of 5% is the final tax. Interest from money market fund, interest is taxed twice. So bring in, we'll say add interest from money market. So interest from money market fund, they're saying the amount is already gross, so we'll add here 36 is the gross amount. Interest from money market. I've added the wrong one. It's supposed to be 120. 120 is from money market. Then there are royalties of 360 net of advertising, of 60 and renewal of patents and research costs. That needs a bit of working note for all of this. So they earn some royalties of 360, but after charging advertising, then they also charge it, renewal of patents. Patents, you see, is an asset. They should not have charged. So we take net income, because they are saying after charging was 360. So to that net income, add back what should not have been deducted. So what should not have, advertising is okay. We'll add back renewal of patents. Renewal of patent. Add back renewal of patents of 40. Research is okay. Research costs is allowable, whether capital or revenue. So this will give us gross royalty of 1. That's what you're doing here. Note 1. So bring in 4. So for rent, we cannot include it here to tax at corporation tax because it will be subject to a tax of 10% because it's within the 10 million. This is called total taxable income. Then you can compute tax. Tax payable by Haraka Limited for the year. Let's say corporation tax. Corporation tax liability will take 44,36,000. We take 30% of that. Haraka is a company. So you get 13,800. Then you lessen withholding tax. There's an income, there are two incomes you're taxing twice, interest and royalty. So you lessen withholding tax. The first withholding tax we'll deduct is on interest from money market. Withholding tax is 15%. So interest from money market. So 120,000 times 15%. So 18,000 we deduct here. Then there is royalty income. So for royalty, withholding tax is 5% for residents. So 5%. That should be 20,000. Then you also show the one for rental. So there's rental income. So they had rental income of from residential property of 2,400,000. So rental income. It's 2,400,000. So under MRI, monthly rental income tax, the tax is simply 10%. So they'll be filing for 240,000. I think there's another leasing question, possibly in September, I think. Yeah, you can check September, but this is now for you to try. Check September 2021. Question 1. September 2021, question 1. You have September 2021, question 1, and there's another one in the same sitting, September 2021, question 3B. 3B is higher purchase. September 2021, question 3B. Let me get some theory for the A part of September 2021. Then you can try B, 1B, 3B as an assignment. Let me try and look for something on the A part. Your theory of September. You can look at September 2021 briefly. Part A, September 2021, A. It says one of the recent trends in the field of taxation is the introduction of digital services tax, DST. Required, explain the meaning and operation of digital services tax, DST, and 2, describe 3 types of transactions where DST is applicable. So we'll answer A, meaning and operation of digital services tax, meaning and operation of digital services tax. Meaning and operation of digital services tax. When you say the Finance Act 2019, the Finance Act 2019, the Finance Act 2019 amended the Finance Act 2019 amended the Income Tax Act. The Finance Act 2019 amended the Income Tax Act to include taxation of income, accruing, from the digital marketplace. To include taxation of income accruing from the digital marketplace. Next point, a digital marketplace has been defined. A digital marketplace has been defined as a platform. A digital marketplace has been defined as a platform. That enables the direct interaction A digital marketplace has been defined as a platform that enables the direct interaction between the buyers and sellers. That enable the direct interaction between the buyers and sellers. Between the buyers and sellers of goods and services. The buyers and sellers of goods and services. Through electronic means. Through electronic means. Through electronic means. Then you say the Finance Act 2020 introduced. The Finance Act 2020 introduced. The Finance Act 2020 introduced a tax. Introduced a tax of 1.5%. Introduced a tax of 1.5%. Introduced a tax of 1.5% on the income from services, on the income from services, on the income from services accrued or derived in Kenya, on the income from services accrued or derived in Kenya, accrued or derived in Kenya, through a digital marketplace, through a digital marketplace, through a digital marketplace. The tax is applicable on the gross. The tax is applicable on the gross transaction value. The tax is applicable on the gross transaction value. The tax is applicable on the gross transaction value of the service provided. The tax is applicable on the gross transaction value of the service provided, and is due at the time, and is due at the time of payment, and is due at the time of payment, and is due at the time of payment. Next point, the responsibility to account for the tax, the responsibility to account for the tax, the responsibility to account for the tax is on the owner. The responsibility to account for the tax is on the owner of the digital marketplace. The responsibility to account for the tax is on the owner of the digital marketplace, the owner of the digital marketplace, or an agent appointed by the commissioner, or an agent appointed by the commissioner, or an agent appointed by the commissioner. Next point, digital services tax. Digital services tax, in brackets DST, is due at the time of transfer. Is due at the time of transfer of the payment. Is due at the time of transfer of the payment. Is due at the time of transfer of the payment for the service, at the time of transfer of the payment for the service to the service provider, to the service provider. Lastly, the DST will be collected and remitted. The DST will be collected and remitted by agents. The DST will be collected and remitted by agents appointed by the Commissioner of Domestic Taxes. By agents appointed by the Commissioner of Domestic Taxes. In the second part, describe 3 types of transactions where DST is applicable. So types of transactions where DST is applicable, types of transactions where DST is applicable, types of transactions where DST is applicable, types of transactions where DST is applicable. The first one is downloadable. Downloadable digital content. Downloadable digital content. Downloadable digital content. Next transaction, streaming. Streaming of digital content. Streaming of digital content. Streaming of digital content. Next time, any form of monetizing, any form of monetizing, any form of monetizing of data, any form of monetizing of data about Kenyan users, any form of monetizing of data about Kenyan users. Next transaction, subscription-based media. Subscription-based media. Subscription-based media. Next time, search engine. Search engine related services. Search engine related services. And the last type is called e-learning. E-learning, e-learning. Okay, so you have then part B to try, similar to this one. Then question 2 is higher purchase 2B. So you try those as an assignment. So that our next topic, probably I'll not introduce that today, will be cooperative, taxation of cooperative societies.